All right, guys, welcome back. And one thing I want to talk about today is options. So they're actually tomorrow, the largest options are going to expire on Bitcoin, which is going to bring a lot of volatility. So almost $24 billion of Bitcoin options will expire tomorrow. And I'm going to talk quickly about what this means for us and quickly explain what options are. So firstly, let's go into Grok and explain what options are. I'm going to try and keep it simple. So for options, basically, these are contracts which give you the right to buy or to sell Bitcoin at a fixed price. This is called the strike price by a certain date. So you have the option to buy or sell it. You don't have to do it. However, if you take an option, there's a premium that you have to pay. And this is the premium. So call options and their put options. Call options are bullish. It means that you think the price of Bitcoin will go higher, and put options means that you think the price of Bitcoin will go lower. So let's give an example. Okay, for example, Bitcoin is $100,000 right now, and the premium is $3,000 for one option. Now, if I buy one Bitcoin call option at a price of $105,000, this means I have the right to buy Bitcoin at $105,000. Now, at the expiry date, if Bitcoin is $110,000 at expiry, I still have the right to buy it at $105,000. So that gives me $5,000 of difference, right, between 105 and 110,000. I then pay my premium, which is $3,000, leaving me with a profit of $2,000. If Bitcoin is $108,000 at expiry, this is still a difference, right? $3,000 a difference. However, I need to pay that as a premium, so I'm left with no money in the end. If Bitcoin, however, stays at 100, if it only goes to 105,000, and I have a strike price of 105,000, I will be able to buy it at the current price, but I still need to pay the premium. And if Bitcoin goes down, if it stays at 100,000 and I said I will buy it at 105, I don't have to buy it, but I still have to pay the premium. Now for put options, so in the bearish scenario, again, the price of Bitcoin is 100K now. I think Bitcoin will go a lot lower, okay? So I say, let's say I have a strike price of 95,000, meaning at expiry, I can buy Bitcoin for 95,000. I want Bitcoin to be below 95,000 at this point for me to make a profit. So let's say Bitcoin is 90,000. Sorry, this means to sell, right? So I can sell Bitcoin at 95,000. If Bitcoin is 90,000, I can then sell it for 95,000, leaving me with $5,000 minus my premium, which I pay for having the option, $3,000. So I have $2,000 of profit. If Bitcoin is, for example, if it reaches, for example, 100,000, right, and I have to sell it at 95,000, I just have to pay the premium, where I lose $3,000. So basically, if there are calls, then people are bullish. If there are more puts, people are bearish because they think the price will be a lot lower. If there are calls, people think the price will be a lot higher. Now, let's quickly look at this chart here. And right now we have the most options expiring tomorrow on the 26th of December. And if we look at this chart here, we have something called the max pain price. And the max pain price is the price at which most people lose money, right? Most traders lose money and the market makers make the most money. And we can also see here that the open interest, we have more calls than puts. The blue lines are the calls and the yellow lines are the puts. So overall, the sentiment is bullish. People think that Bitcoin will be above the current price by tomorrow, but the max pain price is 96,000. And we know that right now Bitcoin is trading around 88,000, right? So if we now look at what happened the last few years, actually. So if you look at the last few years, in 2021, for example, 7 days before the expiry, this is the price 7 days before, it was $49,000 per Bitcoin. The max pain price was a bit lower, right? 47 to 50,000. And at expiry, we reached below that. We reached 46,300, so we dropped 5.5%. In 2022, the price 7 days before expiry was almost $17,000. We don't have exact data on the max pain point, but the price went down. So in 2023, the price of Bitcoin 7 days before expiry was $43,000 per Bitcoin. The max pain point was $10,000 below, and we went down. Now last year we had a price of $98,000. Max pain point was below that, 85,000 to 91,000, and we closed at $94,000 per Bitcoin. So we went down 4%. Now this year, we can clearly see that we have a max pain price of 96,000, right? The max pain price 96,000, which is here, where most people will have to pay up, and most traders lose money, which is normally the price that we go into, we trend towards. And right now we can see that the max pain price is obviously above our current price, which is at 88,000, and the max pain price is here at 96,000. So looking at this, and according to history, it clearly shows us that most likely we are gonna go up from here, going towards the max pain price. And this simply means that tomorrow there's gonna be most likely a lot of volatility coming as we are closing this descending wedge, this falling wedge. And that's all I wanted to tell you guys, explain a bit about what options are, but also highlight that tomorrow on the 26th of December, we are most likely going to have a lot of volatility. And I personally think, based on history, that the price will go a bit higher from here towards our max pain price. So going up towards 96,000. Let's see how high we go. But that's it for today. Hope you enjoyed it. See you next time.